Stock markets waved a thumbs up to central bank status quo policy on Friday. For the week, Nifty and Sensex ended mildly higher, but midcaps outperformed. Hello and welcome to Taking Stock, the show where we preview the week gone by and prepare you for the next week. I'm Anuj Singhal and with me is Ekta Batra.
Hi Anuj. Yes, absolutely. Well, let's in fact tell our viewers what we have lined up on the show for you today as well. For a fundamental check on the markets, we have Mihir Vora, Max Life Insurance. We will also be joined by Anuj Jain, IIFL Wealth Management, for the technicals for the next week. We also have market opinion. We got through the week from the likes of Harsha Upadhyay, Kotak Mutual Fund, Mark Matthews, Bank Julius Baer, and Ramesh Damani, member BSC. But before we get to all of those details, let's in fact tell you how exactly the markets fared this week. It was in fact a good week, you'd have to say, for the broader markets more than the frontline indices. A couple of themes that played out this week was the FII flow momentum, because remember there were 6 consecutive sessions of FIIs buying which came into this week as well, but there was some amount of profit booking which came in from the FIIs after that. Separately, Russia-Ukraine crisis and the headlines emerging from there were one of the key factors. Remember, there were additional sanctions which were put on Russia because of the alleged atrocities in Ukraine. Also, that led to volatility in crude prices. And in fact, we saw a softening of crude prices as well. So that was something that the markets reckoned with. And lastly, it was the RBI monetary policies. So in terms of a sum of what happened this week, it was the midcaps that really outperformed the frontliners. The Sensex and the Nifty ended with minor gains. The Nifty bank gained over 1% and like I mentioned, the midcap index gained a cool 3% in this week's trading session. To put it into perspective, to give you the sense in terms of momentum, 39 stocks gave positive returns this week. But Anuj, what did you make of the markets, especially this week, and especially in terms of the direction that we can expect?
Well, Ekta, for me, the key highlight was on Friday when we defended that 17,600, the level that I was keeping an eye on. In fact, Friday's low was 17,600.5. So technically, the battle is between 17,600 and 17,800. Sorry, 18,000. We are at 17,800 almost. But, more than anything, we talk about levels all the time. This is a market which could be at an inflection point. What is that inflection point? The inflection point is a combination of dollar index making a move to 100 from the lower side and crude falling below 100 from the higher side. If you have a combination of two, if you have a dollar index say at 101 and crude at 99, I think what that could do is you will start to ask a question on whether this commodity run is over. And if that is the case, then would you start to put money on commodity consumers? Smart money has already started doing that. We had S. Naren who told us, that's a bet that he's taking. That is good news for us. If that has to happen, the market will hit new high in no time, and in fact, perhaps even go much higher. So that's something to watch out for. FII data, of course, will be key to watch out for. I think this week's FII data also got a bit sort of confused because of what was happening with the HDFC twins. On Monday, we had those big gains on HDFC twins. By the end of the week, we lost all the gains. So next week is crucial for these. Amidst all this, if I were to stick my neck out, the midcap index will hit a new high before the Nifty does. And I think that process has started. This week has told you that. All through the week, we had positive advance decline. Nothing impacted the broader market. So many stocks where, you have, and the way consumption was coming back. So that way, I think the focus has to be on the broader market. If the Nifty starts to close below 17,600, then this theory is out of the window. But as of now, the base case is that if Nifty defends 17,600, then a move towards all-time highs is possible, and mid-caps perhaps may well lead that move in that case.
Okay, all right, Anuj. Thanks very much for that. In fact, to take this discussion forward and to take stock of what happened this week, we have Mihir Vora, Director and Chief Investment Officer, Max Life Insurance, who joins in on the show now. Mihir, hi, welcome to the show. Well, like Anuj mentioned, there were a lot of events, say, for example, the HDFC merger twins, the twins merger news which came out this week, and separately a lot of the headlines from Russia and Ukraine, Brent crude to reckon with. Give us a sense in terms of what you made of the week gone by and what are the triggers that we can expect.
Hi, good afternoon. Ekta, like Anuj mentioned, lots of moving parts in the market. Difficult to make sense of all this. But a couple of things that I did observe this week. One is that, while we saw a huge move on Monday, when I look at the data, there was a lot of short covering, and the outstanding OI, for Nifty as well as Bank Nifty came down sharply, and it has been coming down over the last 3-4 days continuously. So to some extent, this rally has been driven by short covering, or maybe some of the positions being taken off the table because of this raft of news. Second theme that I've seen is that money is also not necessarily chasing the domestic consumption theme, which is where we would prefer to be, but actually some of the safer havens and the commodity linked value havens are places where we have seen money going in. So there, while the markets have gone up at the headline level, the underlying mechanism is not something that gives us very big confidence in terms of markets betting on India's recovery or domestic recovery. It is still a kind of a hedge trade, I would say, led by short covering also.
Okay, Meher, hi, good evening. Always good to talk to you. What would your portfolio stance be? The market is showing some signs of change of leadership, right? IT stocks at every higher level are seeing some profit taking. Cement stocks are rising, realty stocks are rising. Some of the auto stocks also have started to bounce back. Portfolio wise, do you think it's time to make a complete churn now?
It is time to make a churn, but probably not all in one shot. The broader theme being that we should start betting on India's domestic recovery, which means your financials, your discretionary consumption pack, your industrials pack. But on the other hand, as you did mention very rightly, we have a situation where some of the indicators are pointing to a global risk aversion kind of a trade. We are seeing commodity stocks move up, for example, value stocks moving up, and the dollar index going up, which typically tends to be a bit of a risk aversion trade. So while we are betting on India's medium-term recovery, we are starting to move that portfolio, but not all in one shot over a period of time.
Okay. Mihir, over the week, we did have Ramesh Damani talk about defense being an interesting theme that he's looking at. Is that something of interest to you?
Oh, absolutely. So some of the domestic themes, apart from defense, which of course the government is now very serious about, would also be, defense, the opening up trade of consumption, discretionary segments, all the, the multiplexes and malls and shopping linked sectors, the hotel and hospitality segments, plus the big thrust on Atmanirbhar, which is PLI linked stocks, the PLI theme, and of course some of the chemicals, etc., which have been doing very well, both on PLI as well as on global demand supply. So those bets continue as far as the domestic economy is concerned.
Okay, Meher, I have more questions for you, but before that, I just want to put on board the kind of stocks that did well or didn't do well this week. Let's go across to Agam. He has a list of of all these stocks. Agam, over to you.
Well, it was a choppy week, but we did see more advances from the gainers as compared to losers. Let's start by talking about the index movers. As you can see, Adani Ports, NTPC, Grasim, ITC and Hero MotoCorp advancing by 5 to 7%. On the other hand, when it comes to the losses, well, there wasn't as much in terms of momentum, just about 2 to 5% losses for, well, a host of information technology names like Infosys, Wipro, Tech Mahindra and TCS, and of course Bajaj Finserv. Moving on to the broader markets, we are also talking about substantial gains for the likes of Orchid Pharma, up as much as 40%. Mangalore Chemicals, IIFL Finance, Dynamatic Tech along with JGuitar also advancing by 14 to 24%. And on the losing end, once again, not as much going in there, but we did have about 5 to 7% losses for NDTV, Escorts, Man Industries and J&K Bank.
Okay.